So we have seen financial accounting. Now we will see cost accounting. See, cost accounting term is not like widely uh, known. Okay, and what can we do with cost accounting? See, cost accounting is usually created for the purpose of internal management. Okay, it's only for the management purpose they are creating cost accounting. So cost accounting's aim is to capture a company's total cost of production by assessing the variable cost of each step of production as well as fixed cost such as lease expense. So cost accounting is, assume a company produces a product. Okay, take a product like bike. Okay, so before the launch of a bike itself, the company will try to find out what would be its approximate cost of production. Okay, cost of selling, because only when you know the cost of a product or a cost of a bike, you can then estimate what can be the selling price. Okay, so if the cost of a bike comes to 40,000, okay, and they add a profit of 10,000, so that comes to a selling price of 50,000. If they couldn't sell at 50,000, okay, if all the other products are being sold at 40,000, okay, all competitive products are sold at 40,000 and your product has to be sold at 50,000, we have to check whether the buyers will buy your product or not. Okay, so cost accounting is very important, because if the lower and lower the cost we could reduce for a product, the higher the profit can become. Okay, so cost accounting helps to find out where the cost is incurring. Okay, whether it's incurring at the labor level or at the material level, at the production level, okay, at the marketing level. So where is the cost getting incurred, they try to find it out. So once they find it out, then they try to cut down that particular cost. So this cost accounting is information is never published in financial accounting. Okay, in financial reports or anywhere you can never find out this data unless you're an employee of the company, and unless you're working in the cost accounting department, you will never have access to it. Okay, so it is a secret information of every company. So cost accounting is used internally by management in order to make fully informed business decisions. So that's what we discussed now. Unlike financial accounting, which provides information to external financial statement users, cost accounting is not required to set standards and can be flexible to meet the needs of management. So in financial accounting, okay, there are some rules and regulations in which the accounts has to be prepared. Okay, but cost accounting, there is no rules and regulations in which it has to be prepared. Okay, it is very flexible and it is only for the management's need. Okay, so as it's not going to be given to any third party, it doesn't need to be as per any standard, as per any government rules or regulations. Okay, cost accounting is only for the convenience of the management. Cost accounting considers all input costs associated with production, including both variable and fixed. So it takes a detailed account of how the cost of a product is created. Okay, so that's a concept here. Types of cost accounting include standard costing, activity based costing, lean accounting, marginal costing. So there are like several specialized costing methodologies. Okay, and these we will be like seeing in a later chapters. So now we will discuss about accounting, management accounting. Management accounting is carried out to assist management in discharging their duties to plan, direct, control the operations of the business. So management accounting is very similar to cost accounting, okay, but cost accounting is very restrictive. Okay, its scope is like very narrow. They only try to find out the cost of a business. Management accounting is much larger than cost accounting, because here they try to find out how to improve a business. Okay, how to control a business, how to develop a business. So management accounting is like much wider than cost accounting. And the similarity between cost and management accounting is both are internally used only. And again, management accounting does not give any information to the outsiders. It is concerned with the process of measuring, analyzing, interpreting, and communicating information to management in a form which is easy for them to understand. Okay, so assume that you are running a supermarket. Okay, you need to know a lot of information in terms of running a supermarket, right? You need to know which product is selling fast, which products are selling slow, which product is like making good profits, okay, which employee uh, is like selling a lot, okay, or if you have a lot of supermarkets, okay, under your control, you want to know which supermarket, okay, which branch of supermarket is like making good sales, okay, which one is like making good profits, right? So when you have these kinds of information, it's like easier for you to plan, okay. So if you can find out like the products which are selling very fast, you can buy more of those products. If if there are products which are like very selling very slow, you can give some offers, discounts, and try to push the product into the market, okay. So management accounting is very useful for planning, okay, and also for controlling. For example, uh, you might have heard of targets, right? The salesman usually has a target. See, this target is fixed through management accounting only, okay. So assume that your company has 10 salesmen, okay, and you want to achieve a sales of 1 lakh units, okay, 1 lakh units. So each salesman, you tell, each of them should achieve 10,000 units this month, okay. So each of them has to go and sell 10,000 units, okay. And if they sell it, you are going to give them a salary, a proper salary, okay. If they sell 10,000 units, you might give them a proper salary. If they sell more than 10,000, you give them a reward. If they sell less than 10,000, you are going to penalize them, okay. So to find out which salesman is like performing well, which salesman is not performing, you can use management accounting. So management accounting is like very widely available, okay, it's applicable, and it's like very useful for a company. Management accountants will use the financial accounting records as a source of data for their work, but they may choose to use any other sources of data, both internal and external, that they feel useful for managers, okay. So management accounting relies on financial accounting, okay, but that is not like exclusively. They also use other information sources such as internal, external. How can external information can we get, okay, we can get like if assume that you are Hero Honda company, okay, you can find out like how many bikes Bajaj sold, how many bikes Honda sold, how many bikes TVS sold, okay. You can compare that with how many bikes your company sold, okay. So you can get access to external information also, okay. So that's something which is unique to management accounting. While there are no legally required formats for management accounts, there are several key management reports that are common to many businesses. Management accounting is used to create cost schedules, budget, and variance reports. So this we'll see as a separate chapter later on. So where can management accounting help you? Okay, management accounting can help you in pricing. So what should be the appropriate price? Okay, so should you price a product at a higher level or a lower level? Okay, what is the ideal level in which you have to price? So that kind of decision you can make. Break even analysis. Okay, so uh, at what level of units, okay, your units of sale, your company neither makes a profit or loss. So you should know this, okay. Even if you are going to sell something like sandwiches in a small shop, you should know in which number of sandwich you will be like breaking even, okay. So where at which point you neither make a profit or loss. Key factor analysis. So this we will discuss later. Investment appraisal. So management accounting also helps in finding out whether to uh, is it like worthwhile to buy a new machine, okay, or to construct a new factory, to invest in something for profit purpose. Is it like worth to invest or not, okay. So management accounting has like wider applications here.